Hey there, guys. It is Jason. Hope you're having a wonderful day. I had a amazing trade on gold today. I just wanted to do a little bit of training on it, exactly what I was looking at. Maybe it can help you in your trading. If you're not yet a trader and you want to obviously become part of our team or you want to learn how to trade, send me a message. I'd be more than happy to help you and explain anything that you don't understand in this process. But guys, we've been doing this for over 6 years, just shy of 6,000 people in our personal team alone, and we are here to help you as well. I've been doing this since 2017, and you can do this as well. This is just what we call smart money concepts, and I'm just going to break this down here for you, and hopefully it will help you in your trading career as well. All right, let me go ahead and share my screen, and let's do this. All right, so we're going to focus on gold today. This is one of the pairs that I personally trade, and just wanted to kind of just go through my thought process on this. So on gold here on the 1 hour, because I am technically a lower time frame trader, I'm looking for trends on the 1 hour in that area. So we have what's called a changing of hands down here. We have this liquidity steal or liquidity grab down here by the banks, right? Because the banks are in control of all of this, ladies and gentlemen. And then we have a significant move up, right? We have a push up with a break of structure, kind of a pause in here, another push up with what we call equal highs. And this is really important right here. So let me go ahead and mark that in for you guys. Right in this general area, right in there are equal highs. And what we've actually put there, what I like to put there is a money symbol, because guys, this is where the banks come right up into here to get their money, right? In the retail world, people are putting their stop losses above here. And this is what we know. They love to come and get these stop losses that the retail traders put up in these areas. So this is something that is a target that I'm looking at. Okay, so that's step number one. Step number one is that this is on an uptrend. Okay, step number two is that what is the reason that they would come up here? Well, there's money up here of the retail traders of the stop losses. Okay, so then we drop down to a little bit of a lower time frame. Actually, before that, I'm going to show you this zone that I have drawn in right here. Now, a couple different zones in here. We have a zone in here, and this actually goes farther off to the left as well. There's another zone right here down in this area that I was looking at last night. Another area possibly down here, but it never got down here. All right, so you have to be fluid in what you are looking for and what you're looking at. Because again, the banks are in control of all of this. So let's drop down here to the 15-minute, and I'll kind of show you what I was looking at here for this trade. So we obviously have this area, right, of interest that we're looking at. We had a push up out of that area. So what I'm looking for, right, is to kind of just see what price action does. So let me just go ahead and push play so you can see for yourself as well what this does. All right, cool. So what did it do just now? It made another equal high, right? So if we go back out to the 1 hour, this just made, right, another equal high in this area. Okay, so again, this is all building up orders. It's building up ideas that the retail traders are having that, oh, this is going to fall down into Hades. Right? So again, I don't believe that. I know that this is where the banks would love to come to be able to take those people's money. So drop back down here to the 15-minute, and let's play this out a little bit farther. So now, right, let's just see what the price action does now. All right, cool. So we came back down into this zone, right? We came back down into this zone right in here. Now, do we enter down in here, or do I enter down in here? Nope. Nope, not yet, right? Not yet. And I'm going to show you exactly why, because I'm looking for this. Let me actually bring this up for you right here. Okay. I'm looking for this to be broken. This is called a break of structure. Okay. Now, this is really important because there are reasons this could fly down out of here. There's reasons for this area down in here. This is a demand zone or supply zone down in here. These are all areas that they could come down into. So I need to know that they want to go up. I need to have a reason, right, that they were going to go up. They're going to show me their hand. That's what we talk about all the time when we obviously are showing people this stuff, is that they are going to show you exactly what they're going to do. Okay, so you need to be patient to wait for that. So I have this line right here called the break of structure line. You can put an alarm on this, right? So that when price does come and break the structure, you can be notified right here on TradingView. So let's go ahead and play this out a little bit farther. Okay. So this, right, is just kind of messing around in this area. And this is a kind of area that people would have gotten messed up in. Right? Because this is a really important teaching point that I just want to show you really quick. Okay. So this, let's say we're just looking at this. Okay. So cool. So we're looking for this to possibly go up. Now, a break of structure, okay, does not happen until it is body over body. That is the way that I have learned it. That is the way that I do it. So needs to be body over body. And in other words, it needs that these wicks don't matter. So let's go ahead and play this out again. And let's just see what happened frame by frame. All right. So we had a big candle right here, a big candle that broke but didn't stay above, right? So that does not count. Okay. And then let's do this next one here. And then a crash back down. Look at that. So if you'd gotten in, right? If you had gotten in somewhere, up here, right at the break of structure, which I don't recommend, right? You would have got probably a huge drawdown on that. Let's go ahead and pull this back. So we're actually drawing down even deeper into this area, right? So these are all, and you probably would have lost this trade if you had gotten in at that break of structure or that break of structure with the wick. But again, it's not technically a break of structure. Okay. So I am still waiting in this area. I am waiting for a break of structure. Are we going to get it? I don't know. Let's find out. There she is. Okay. Now, if you're not sure about break of structure, here's what you do. Come up here to these little bars right here and click on line, right? That line takes all of the wicks away. So it takes out all the distractions. Okay. So now I know this is now broken this internal structure. Okay. This is now broken this structure. Good enough for me. I'm going to go back to my candle chart. Okay. So now what am I looking at? Actually, at this point, once I get a break of structure, I'm immediately going down to a 5-minute time frame. As I said before, I'm a lower time frame trader. I don't necessarily recommend that for everybody, but I've been doing this for 6.5 years. So kind of, paid my dues, as they say. And in this is a nice, beautiful area. This is what we call a banker's candle right here. Okay. So this is a banker's candle. It's a 5-minute banker's candle. I'm going to mark this up here for you. Right there. It's a 5-minute banker's candle. I'm going to put 5-minute entry because that is where I entered. Okay. So what do we have all here? Let me just kind of backtrack and kind of recap a little bit before we go ahead and show what this trade did. Okay. So on the higher time frame, let me just do this for you. We had these equal highs up here. There's a reason the banks that want to take those. Okay. Then we have this, obviously, this is in an uptrend, right? We're trending up in here because obviously you want to always trade with the trend if you possibly can. You're then looking for a break of structure. Okay, right in here, there's your break of structure. And now, last but not least, the pièce de résistance is this beautiful 5-minute banker's candle right here. Okay, 5-minute banker's candle. And then let's see what happened. There's your entry right there. There's the entry, right? Stop loss below this wick down in here. You can, if you go a little bit more conservative, you can put it down here if you wanted to, right? And now let's just see what happened. So this is the entry. Let me actually just show you, put a little arrow on here for you guys, right? That was the entry right there. A little bit higher. There we go, right? That was the entry. And then this is what happened after that. Boom, shakalaka. That is killing, right? Actually, it's all the way back up here now. Retrace. So here, let me just show you this real quick. Let me just play this out a little bit more for you guys because actually it's come all the way back up. There we go. All right. So this was my entry. And up here was my exit. And I didn't exit the whole thing, just being transparent. I exited a portion of my trade because there are reasons for this to go up even higher into here, right? There's another 4-hour banker's candle up in here that I could go after. So this is kind of what I'm looking at. But I'm not telling you that, to do that or anything of that nature. This is, obviously, this was today. This is the 18th of September, 2023. And this trade was a monster on the 5-minute time frame. But I wanted to give you my thought processes. I wanted to give you because we don't just get into trades, guys, when we think they're going to do this. We get into trades when the banks show us what they want to do, right? I didn't get into this trade up here when this had this wick. I didn't get into here right? I waited for this break of structure, okay? And then I waited for it to come back down, wick me perfectly into that trade, and then off to the races. And this is where it is live right now, okay? So guys, you can do this. Let me come off screen share, right? This was an absolute monster trade, right? And you can do exactly the same thing. And I know maybe what I just explained to you or showed you was a little bit, seemed complicated, or it seemed like, it took some skill, and it does take skill. This is not a get rich quick scheme. This is a way for you to understand how the markets move and be able to extract money from them if you desire. Right? Again, this is not a get rich quick scheme. There's no guarantee of profits here, guys. This is a skill. And that's exactly what I just showed you. I showed you exactly what the banks should do, what they absolutely did, and they showed me their hand before they did it. If you want to know more about how to trade, about how to really understand how the banks move the markets, not just on gold, but on Forex and on indices, and on stocks if you want to, right? Just send me a private message. I'll be happy to help you any way that I possibly can. I'll actually give you info on a free training site that you can have access to. But guys, here's the deal. Learn this skill, right? I just got off of our mindset webinar a little bit ago, helping people, right, to have the right mindset. And guys, we have amazing educators, amazing sessions. You're not going to be by yourself learning this. I want to help you. So if any of the stuff that I just showed today is interesting to you, send me a message and let's do it together. All right, guys, be blessed. That is it for me. Have an amazing rest of your day and your week, and we'll see you on the inside. Send me a message. Be blessed. Bye for now.